All right, guys. So I hope you all having a good weekend. Happy Thanksgiving. So we're taking a look at this SMCI Black Friday. So today we did have a half a day, and market was closed in half a day. SMCI 7% or so down for the day. In the morning, it was flashing down. There was a rumor of delisting, but it's not like a factual news. It's just I couldn't find like confirmation on that, but that was the headline, right? Again, it was not like somebody published it. It was just purely on Twitter. But if you take a look at the Super Microcomputer's SEC filings, we don't see anything except for November 26th. There are some forms, and I went through them, and that's what it means is basically they terminated some of their loan agreements with two banks, Cathay Bank and then Bank of America. So why that happens, again, I mean, you can do your own research. These videos purely for educational purposes only and entertainment purposes only. I did a little bit of digging. Looks like this Cathay Bank, it's a Chinese bank that operates in the US and headquartered in LA, California, and then Bank of America. And there are a few times the companies can just do that, basically terminate the loan agreement. Number one, those banks look at your equity. It depends what you have put as a collateral, right? You could have put as a collateral your products, in SMCI's case, I don't know, servers, whatever, or your stock, or your properties, anything, right? Anything that you can put out there as a collateral. And if the value of that collateral that you put out starts going down, in SMCI's case, again, purely like my guess, okay, I'm not saying this is factual news or anything like that, but maybe they could have put as a collateral the stock, okay, and that stock value plummeted in the last few months, and they could have just said, okay, guys, I think we gotta close this deal and maybe renegotiate that new deal. That could be the case. Or SMCI themselves, maybe they had their products as a collateral and they wanted to close it themselves. But again, you can do your own digging on that one. It's usually not a good news when it happens, but on that day, SMCI closed about, I don't know how many percent down, 10%, 11%. But here's when we talked about this one last time. So we have been talking about this for quite some time. November 15th, plus or minus 100%. That was the video. We were sitting at around these $20 levels. The target was somewhere around here, $39, $38 levels, 50-day moving average. This yellow line right here is my 50-day moving average. And then we talk about uncertainty right here, and then we talk about target right here. And that's when I made a video about this one last time, when I was saying that, okay, so from here, the risk is to the downside, not to the upside. After moving so much, it could just chop around, do absolutely nothing unless we hear something from the company. Sure, we can still hear from the company, and you can definitely recover and push higher. But until then, there's uncertainty. If you're trading this, you're just purely speculating at this point. You have no clue about what's going on fundamentally with the business. And you don't have no clue what is going to happen from here. We have already seen like their direct competitors, right? Reported earnings. They didn't report good earnings, okay? Dell, who else? HP, HPQ, they were all down actually on their earnings reports. So these are like a few things. But right here, right now, going forward, it doesn't matter what happened in the past. Going forward, I still think that the risk is to the downside and not to the upside. There's more risk to the downside than to the upside. But again, it's you got to do your own research, and it's your money. You have to take care of the risk yourself. However you're thinking, whatever the trade initially you have placed, you have to stick to whatever the strategy you have, okay? But if I see any stock rally in a very short period of time, 100%, I'm taking my money and I'm running, basically. This is me. So ultra short term, below 50-day moving average, okay? It couldn't get back above it. It couldn't stay above it. So this line right here is your 5-day moving average, this gray line right here. Anytime stock below 5-day, I'm bearish to neutral, but I'm not bullish. If it climbs back above it and gets back above 50, it is really bullish, ultra short term for a possible squeeze or something. But right here, right now, 30, that's my support. Below 30, I'm going to be watching this 20-day moving average, which was downtrending and now it's trying to curl, which is at the moment $26.67. So, but these 3 days of a decline, of course, it's happening on a lower volume. That's why when I made a video right here saying that, you can watch it actually. What was the title? Target. So that's the video. And I was saying that a lot of people selling calls here because implied volatility is still high and those people are taking advantage of it. So 3 days of a low volume move. And again, we knew that this week would have been slow like this. But if you go take a look at the option activity of SMCI and just pull out any chart that you want to look at it, you will notice that those prices, those contracts are decaying, but volatility is still high, IV is still high, and it will stay high. It will drop to a certain point, but it's not going to be cheap, okay? And it will still be implying that it's going to move 30% any given week, or by December 20th, it's implying $10 move. That's almost like 28% move, okay? And you will, it will be like this until they release the 10K, 10Q, and sort out the what NASDAQ is going to do with their plan. Okay, if they accept it, perfect. Okay, they get to live a little bit more with the exchange. Okay, and right here, right now, like today, it was short day. But if you take a look at the put to call ratio, nothing was standing out. A lot of people were still taking advantage of the IV, and they were still selling calls and they were selling puts. So this video is not a bearish video and this video is not a bullish video. So at this point, this stock is neutral for me, and those are the levels. I don't think that it's going to move big unless you hear from the company. And you can see the option market is thinking the same too, by selling calls and selling puts. So, but the risk is this much basically for me. By January, let's say 17th, you can see the IV for those that are February and March, a little bit higher, because look at the February or March, look at the March 21st, 2025. $25 stock is implying. Stock's price is $32, which means by that time, there has to be a decision. There has to be 10K released, 10Q released, everything has to be released because they will run out of time. And at that point, NASDAQ has to decide. If they end up giving them 180 days, okay, that's the maximum they can give, okay? There's no more extensions after that. So that's why it is implying that much. If you look a little bit further, summertime, maybe May 2025, May 16th, it is implying almost 100% of this stock price's value, which means stock market is saying that by May 16, 2025, it can either go to zero or it can go up 100% up, which means go up to $60, $65, or go to basically $1 or 50 cents. So that's what option market is betting on, and this is it's gonna stay high. Of course, it doesn't mean that it's gonna happen. Probability of that happening very, very low. But if you go take a look at it, strikes, and see, like, pull out the strikes, and if you take a look at the probability of this stock, let's say going to $3 come May 16th next year, 13%. And then probability of going to $65 from here, 10%. So that's the probability. So that's the video for SMCI. That's what I'm watching. See you in the next one. Take care. Peace.